Anyway, so yeah, man, I just hate thinking about it. It's like, oh, my nephew was on campus. My wife was on her way to the AAA office because my oldest son's in Taiwan and he's going to be driving a car. He needed his license, and so she was trying to go right. It was going right past the college there and university. And all of a sudden, there's all these ambulances and police, and everybody's just descending on the scene. And I'm like, she's like, "What's going on?" I'm like, "Well, I think Charlie Kirk's there today." And so then I'm like, "Oh man!" I'm like, so I look it up, like it is. I'm like, "Oh man, there better not have been a shooting or something." So I'm getting on Twitter, and all of a sudden, you just hear it just come up. And yeah, it's just awful to think about. And anyway, so let me go in here. So I can get distracted easy, especially on those kinds of topics. And anyway, all right. So let's take a look at the markets. So we got the CPI print, right? So I mean, the tenor of the market, and again, if you don't know, you don't know, right? We can be blissfully unaware of what's happening beneath the surface, right? We could be blissfully unaware of what's happening beneath the surface. And if you were long going into the yesterday and today, you're probably blissfully unaware of what's going on beneath the surface because there were a number of big trades that were happening that were really pointing to the fact that these CPI prints, okay, these CPI, PPI prints could have caused a bit of sell side issues. Okay. And so the idea is that things were skewing that way. Now, the question is, we get the CPI print today. Has that changed? And that's what we're going to talk about today. Okay. And so the idea is that has that changed? So, Branch James, I'm not sure what you're trying to accomplish there, but we'll just delete that one. But sorry, let me just so we're going to try to address that. Has anything fundamentally changed? Do we need to change our outlook as a result of the reaction to what's happening today? Okay. It might be buy the rumor, sell the news event. Well, in actuality, it was sell the rumor. And now are we buying the news? Why do I say that? Because again, if you don't know, you don't know, right? If we're looking at the S&P, what did we just have here? I mean, the market's done nothing over the last week. We tried to move yesterday on a PPI print. We faded off the highs. Today is a much more decisive move in the market. And when you look at what's going on here across the board, gold is down. What's performing well? Cyclicals, healthcare, materials, real estate, technology already got the kick in the pants, right? XLE's up slightly today on a gap down. Why? We had a massive build in energy yesterday in oil. Oil's down today, and yeah, XLE's getting bid. Go figure. VLO, there was some strength in refiners. Refiners are taking a little bit of a hit today. So my point in sharing this is that yesterday was not actually a bullish day. What we saw was that technology and utilities were topping the list yesterday. Today, we're actually seeing a difference. We've seen this kind of trepidation all week, and today we're getting that release to the upside. Now it's a function of, if you've been a little more bearish, do you scramble and get long? That's exactly where I'm at right now. I closed out some of our bullish trades a little early in KWeb, for example. We were going into the last 2 weeks, and we saw this pop on Monday. I'm like, we got to shut it down for 35%. We're shooting for 70. We would have got to 70 today, but why would I want to risk a 35% gain with less than 2 weeks to go to expiration? I'm not going to do that. I get under 2 weeks. If I can get a profit, we're out. Now I got my losses. And the reality is, I made some mistakes here. I was shooting for XLF back here. I thought XLF was going to make a major move to the downside, and we got it for a day. We had a 91% gain on our spread. We normally close it for 70, but in this case, it was a very cheap spread. We're looking for a bigger return. I went 3-point spread. I wanted more out of this. The VIX vol spread, right? The VIX vol spread. Well, back here, we saw the pop. It was up 60% at one point, back on the 1st of August. That one expired worthless. Because why? I was swinging for the fences a bit more. Well, why would you want to swing for the fences? Well, look, we're trying to target a 50% return every 3 months. How do you do that unless you eventually, at some point, take some swings? And this was the first time in Ghost Prints we really took some big swings, and we were on the cusp of really hitting it big. And so the fact of the matter is, the lack of breadth really just shows how underlying weak the market is. So when the professor says, I'm doing well in my shorts, exactly, because the market's not strong. It's not actually a bull market. Now, and again, you know, those that know me know that I hate the term bull market and bear market. I think it's a worthless description because everybody talks about different things. And if you're a bull, you're going to be a bull anyway, no matter what the market's doing, right? But I think we talked Professor the other day when he had a lot of short positions, a lot of cash, he's already in a bear position in the market, right? So if we're already in a bearish position in the market, how can we call it a bull market? Why aren't we bullish on the market? And so when I look at this and I look at the print yesterday, 2.75 million shares traded at 652. That created a significant level, and we finished below that as we're breaking through it today. We're up 0.81% because it goes up every day. Well, look, I mean, the reason why the market's gone up a lot and we've masked over the weakness, the reason why we didn't sell off back here, the reason why on the 22nd of August, we didn't follow through and we ripped higher, it was Jerome Powell, right? This right here, this day right there was what? It was Jackson Hole, right? So the dollar getting crushed is why the market's higher. You look at gold and you see the breakout in gold since the 22nd, you realize how much weaker the dollar has gotten over the last few weeks. But it's not necessarily a mainstay, right? Was today's CPI print bullish? Not really. It was in line. The headline number was above expectations at 0.4. Most of the inflation were services, not tariffs. So the point is today is that, look, have we made a shift? So the question is not whether we're in a bull market or not. The question is, do you need to get bullish as a trader? Now, as an investor, you should probably have a bit of cash right now. Should probably be hedged. But in that process, you're also long the market. You also have a bullish delta. But as a trader, over the last few weeks, I've clipped some of our bullish trades for smaller gains because the market hasn't really extended to the upside until today. Today is the first real extension. We had a big move here, didn't extend. We had a big move here, didn't extend. We faded, we consolidated. We started breakout yesterday, faded. And today we're trading near the high of the session. And the tenor of the market is bullish. Now the question is, where do you get bullish? Do you start to jump in cyclicals? Are you starting to look at that sectors where the opportunities might be going forward in the next few weeks? Is it healthcare? Healthcare breaking out today. Is it healthcare where you look? Is it materials? We've got what when we look at it right here, we have what? We have an inverted head and shoulders continuation pattern. Why? We had a prior uptrend. A head and shoulders continuation pattern. I hate drawing this because it can get obscene. We haven't broken out yet, but is that where we're going to see the strength? What about real estate? Real estate's boxed in. We're seeing a move. Why? Look at TLT. TLT is extending through. I'm not really that bullish on TLT. Got a question today about ghost prints. There are positive bullish prints today in TLT. There were yesterday as well. I've seen this thing to get back to 88. We're good. So I'm not closing my trade that's on the bearish side, kind of expecting we're a bit overbought here, that the risks were to the downside. I've got 36 days for this thing to come back around, which frequently it does. But does that mean I need to start to look for opportunities in areas that are interest rate sensitive? Real estate being one of those. What about utilities? Right? So this is where all of a sudden today, okay? This is where all of a sudden today you got to make that determination. And again, how are you making that determination? What steps are you taking right now to find where to get long? Because that's the real question. I don't expect the breadth is going to significantly improve, but the fact is it might actually. And what are you prepared to do? So when we look at things right now, we're saying what? We're looking at this and we're saying, okay, what is the market giving us? Right? Where is the money flowing? Where are the big opportunities? Now, as we look at this, there's about 868 different prints. Now, again, there's a pre-filtering process to get to this point. There's a lot more than that out there. They're just not very relevant. And the fact of the matter is 869 of these are not relevant. So what I'm going to do up here, I'm going to change the location again. We're going to look at the ask. I'm going to focus on this part of it. We're going to look for large block trades to see what we can initially see based on today's activity. We're going to look at volume alert. So when it triggered, it needed to be over 3,000. And we're looking for something over 2 on the volume to OI ratio. Now we've boiled down 870 different trades to 23. We could expand this, but is there enough here to draw from? Well, first on the list, this is the most recent. Right now I've got it sorted by alert time. We just saw this pop up here a minute ago, and it's VXX. What does VXX do? We think about VXX. What is it? So we come in here, we go VXX. This is your I path. This is for what? This is a ETN exchange traded note. It's tracking what? The VIX. Now here's the deal though. This is a product you'll never want to buy. You buy it today for 33 and it eventually goes up. It might go from 20 to 30, right? This is not a product you sit in. And right now, when we look at the VIX to 3-month VIX ratio, we're looking at what? We have a very, very steep term structure. We are in contango. VXX is getting slammed right now, right? VXX is getting hammered. Why? Because this is what? Exchange traded note. It's not really giving you the details here, but what this does, it's linked to volatility. And when you look at what volatility is doing, and if we come here, we'll go to we'll go to product depth here, /VX. What this is doing is it's basically right here. And every day it's rolling to the next contract. Every day it's rolling to the next contract. And right now we have a very, very steep term structure. 18. And what is it right now? About 19 and a quarter. That's what? 1.25 points. 1.25 divided by 18. They're basically VXX on the portion it's rolling is losing 7% a day. Okay. You want to know why VXX is going down? It's because why? Because every day they roll to the next contract, the near month, they're rolling part of the inventory. And what happens is every day right now, at least today, they're taking a 7% hit. And what this shows you is that near month to next month, right? VIX3M plus VIX. Again, this is elevated. We're in a steep contango and it's smashing VXX. The irony is that when volatility expectations are at the highest, VXX is going to get smashed until what? Until it's resolved. How does volatility resolve? How does the 3-month VIX go down to the 1 month? How does this go down here below 1, where the 3-month drops below the 1 month? It takes selling. It takes buying of the VIX, right? It takes put option buying. It takes a sell-off to get us there. So today we're up 0.81%. We're in a quandary, right? Do you suddenly just to have to get more long? It may be pushing you in that direction. The question is, do you resist and stay in cash? Well, with Ghost Prince, though, I can't do that, right? We're making 2 to 3 trades a week, and plus we're doing a lotto trade every week. The lotto trades have been tough because the market has not been directional. Very few stocks have made moves. And what you'll see right here in VXX is someone's buying puts on it. They're going to be expensive, but they're expecting this contango environment of low VIX to persist at least through what? Tomorrow, right? They're expecting the VIX to drop. Well, again, is the VIX drop today? Are we seeing heavy VIX selling? No. VXX doesn't need that. They just need the effect of contango to drag it down. And if we keep going up and the VIX keeps going down, if we see a breakout to the downside, yeah, that's going to pay off. What's the strike on VXX today? 33.5. We're at 33.70. Again, the contango that's in the market, in the VIX futures market, as reflected by the 3-month to 1-month VIX ratio, my 90-day rubber band, suggests if we don't get a sell-off, if we see further buying tomorrow, this could readily go in the money. And what's that trading for right now? September 12th, one day to go. It's trading for about 20 cents. Okay. Interesting trade, right? VIX goes up tomorrow. Contango, this gets smashed. Sorry, VIX goes down tomorrow. The contango could push this down here. Could it drop to 32? Absolutely. You'll see some big declines here sometimes. August 22nd was a huge decline. Are we going to get that tomorrow? Is there a catalyst? Not really. But if we see a big move tomorrow, yeah, that's going to get smashed. What else is on the list? Nvidia just came through as we were watching this. Yes, this will update throughout the day. So if you put in your settings, it'll show you the next one. You don't have to keep running a search every time. But right here, Nvidia, you'll see 20,000 contracts traded at the ask against 921 of open interest at September 26, 2025. So let's look at NVDA. I mean, just when you think it's okay to come outside, everything's bullish. Look what's fading today. It's Nvidia. How do you get short? So we look in here, right? So what size of trade happened today in Nvidia? We go to time and sales here. And again, we see 19,999 puts were bought in one trade. Now let's see what else is out there on Nvidia. So I'm going to come up here. I'm going to clear this out. And I'm going to punch in Nvidia. Do we see a lot of prints today? So there you go right there at the ask. Selling put, selling put, selling put. Not really consequential. Buying puts. That trigger happened right around the same open interest, is not as significant. Calls being bought. 85,000. Well, guess what? 85.9 was traded right there. Right? So to me, these are not as significant. Right? They're probably just getting churned. But let's take a look at it. So we're going to look at the 180, the SEP 12s. That's for tomorrow's expiration. SEP 12. So we're going to highlight that expiration. We're going to the call side, SEP 12. What kind of size is coming in here? And what was the strike price? It's the 180. So I'm going to come in here. I'm going to go, okay, 180. It's not as clear, but clearly there's a ton of activity going on right now, right? In that 180 strike price. I guess got to maximize it there as well. Scroll this back to 180. Is there anything significant going on? Well, in the 180 strike, the biggest trades were actually at the bid price. Now you can see here 48.49, 43.44, very, very tight spreads. We could probably dig in more here and say, okay, was there any sort of buying activity that occurred in the midst of this? But all the size is at the bid price for the most part today, right? Do we see any, let's just go by time here. Do we see any periods of real kind of a buying frenzy here? Now the first print happened at 9:52. We're missing data, right? We are missing data. So we got to come up here and it becomes really, really opaque, right? Right here, 196,000 contracts. Oops, wrong one. We're going to right there. We're going to go more info. We're going to look at the charts. Oops. We're going to bring it on the second chart here. We're going to bring that to a 1 day, 1 minute. We didn't get any activity prior to 9:30, right? We're missing all of this. Back this out. We're missing all of this. We can't even see what was going on there. We could probably guess what was happening, right? Coming here 1 day, 1 minute, what was happening? So we come in, we had we had a kind of gapped up, we sold off. You can kind of see right here, right? We basically opened up where the pre-market went. We kind of traded, we sold off here. We popped back up again, shot up, faded back, popped up, went down. Okay. When this triggered the alert, it was at 85,000 contracts. This was much later in the day, right? Because we had to clear 85,000 contracts before we got there. So none of what's been reflected on the console actually reflects what happened here. But the fact of the matter is, does this look like a lot of call option buying? If you're looking at the price of the stock what's going on here, does this look like call option buying? No, right? Is there any sort of gamma squeeze in the price? The answer is no. So when we received the most activity off the bat this morning, we probably saw a lot of call selling in the process, probably a lot of day trading, just churning it, right? And then finally, once we got to 85,000 contracts, now it becomes interesting for us to look at. But again, we just barely passed over that threshold, which just says we're just seeing a lot of small trade, which on the aggregate is big. But what we want is institutional level activity, and that's not really what you're seeing here. I mean, you're definitely seeing hundreds of contracts. Those are institutions, but we're seeing more trade instead of really taking a directional bet on Nvidia. So as we look at this, we're seeing it's pretty decisively, right? On the bearish side, we're not seeing tons of prints. This is a small one right here, right? That's a big one for 926 to 105. So we're not dealing with tomorrow's expiration. We're dealing with the 26th of September, which is right here. Okay. At 105. Now, what do you think of that? That delta is 0. Okay. That delta is 0. So the issue is that with Nvidia, do we really take a lot of stock in that? There was bearish trade yesterday in it. That was significant. We talked about it. We're not getting any follow through today, which is a positive sign if you're bearish on Nvidia and bearish on the market. But the 20,000 print all the way down at 120 is not consequential, right? 105. There's nothing that this is going to really do that's going to move the market. And can we get there in short order? Probably not. That's way the heck down here. Okay. There's very little skin in the game in that. So you can get all excited sometimes about something you're seeing, but in reality, we got to take some extra steps here to really kind of make a determination. So for Nvidia, that's not really a very significant print. Okay. Seeing something come through on SPY, pretty small for SPY. TLT, this is size, right? This is size coming in TLT. Now this counters something that happened earlier today. So I'm going to clear this out here. We're going to look at TLT. And we're going to examine. Yeah, you got to punch these in here. Well, I'm going to go. We'll just look at it all. We had a call spread traded earlier today, 20,000 contracts buying the 91 and selling the 26. And then at the same, a little bit later, we get puts being bought, 12,000 contracts on the 89. This right here, notice the vol alert is very similar to the open interest. We just barely limped over that threshold. We've amassed a lot of trading. That's going to take more scrutiny to be able to analyze. 2,000 contracts here, not really a big deal. Calls 90.50 down here, 14,004. We're basically just churning. These are for tomorrow's expiration. So we're just seeing a lot of trade happening, day trading type activity. This is extending to December. That's extending to next week. I look at that much more as being much more significant. So now what do we have? We have two significant trades on TLT. Let's take a look at the price. We're up today, right? Bearish trade to the downside going into the next week's expiration. We have a bullish trade going into December. Are we seeing any clarity today on TLT? No. Right? Nvidia, we get a bearish trade. We had a bearish trade yesterday that was significant on Nvidia. Not a whole lot going on today in TLT. Trade's kind of changing here, is evolving as the day goes on. But I'm gonna take these off again. Okay, we'll go back to vol. We'll go 3,000 again. We may want to expand this a little bit. Let's go to vol to OI ratio of 1.5. Okay, we want to see stuff that's opening activity. So we got this here, Lucid, GLD, 20,000 contracts. When did that hit? 11:50. Okay, it's 11:50 Eastern time, so about 10 minutes before I came on. It's part of a spread trade. We got Teva. What sector is Teva in? And this is a generic, by the way. This is a generic pharmaceutical producer. So let's take a look at Teva here. Now, this doesn't give us a bigger macro picture. There was a bullish trade on Teva early in the week too. Teva, where do we stand right now, right? So we had a move, we had a consolidation, we're having another move here. I'm going to draw a fib projection. This is a longer term projection, but I'm going to start right here and go back to the beginning. 161.22 is a target. What trade happened today in Teva of interest? The trade that happened is a 2050 call for 919. This is next week's expiration. So let's examine here, 919. So we're going to come in here. We're going to see 4,000 contracts traded. I'm going to right click here. We're going to take a look at the intraday activity. Was there any sort of gamma squeeze as a result of what we saw today? Well, you see the interest coming right there at 948. 4,000 contracts traded in one print. That's 948 mountain time, right? Now, what happened to the stock price? 948 is right 941. Where's 948? Not a whole lot going on. It kind of happened right about right there. Volume to come in. We're seeing some big intraday kind of swings in Teva. Now, here's the question, though. Indian Pharma, there is actually a Israeli. So Teva is Israeli. So we go to analyze here. Tel Aviv. But it develops, manufactures generic and other medicines. So what trade is there in Teva today? It's one thing to have a bullish expectation in Teva. We kind of broke out here. Pulled back, kind of retested. We bounced, broke to a new high again. Maybe 22 in the coming weeks or longer. There's no earnings announcement. That was 7/31. We're not going to have earnings until the end of October. Is there a trade here? Do you like a trade in this one? Not really sure. I don't like the position, frankly. Is there a reasonably priced trade that we could put on? Now we're looking here, 50, just out of the money at a 20 delta, basically at the money, 34.5%. You got here 33.88. You look at the difference here. It's about 60 something cents. Go buy deep and wide, 1 month, 2 strike vertical. It's pricing about 62 cents on a $2 wide, but that's pretty far out of the money, right? For this to get to 22 is going to take a pretty extraordinary move. Your break even comes about 20.65. So that's a rather expensive vertical here at 62 cents, just because the degree of movement is significant. Could be a stock trade. We're a little bit overbought here in the near term after the print earlier in the week in Teva. We got a nice little move here off of a kind of this consolidation phase. So for me, Teva doesn't give us any bigger picture on the market. It gives us a sense that maybe healthcare is showing some signs of life. Well, we can actually break down healthcare. I'm going to clear out the filters here, and I'm going to change that back. I'm going to go back here. We're going to be looking at the ask, but what we're going to do is we're going to look at specifically the healthcare sector. Can we find anything in the healthcare sector today? Any sort of breadth in activity in the healthcare sector? All right, so now we're seeing it. We're seeing all this stuff filled at the ask. I want to expand the volume to OI ratio. I'm going to go to 1.5. This is a little more advanced than what I generally show. But what do we see here in the midst? What is popping up? IMVT, yeah, it's a spread. Pharmaceutical company, there is zero liquidity. As a trader, we need liquidity. What else is popping up here? ROIV. What's ROIV? ROIV. This sucker's been ripping, right? Already. So we come in here, ROIV. I mean, where are we buying again? Can we pull out of this target time frame, et cetera? 9/19/15 strike, 14/38. So where are we seeing it? We're seeing it right there. Did we get a gamma squeeze? Gamma squeeze means that the activity is driving the price, pushing the market maker to hedge. So we come right in here. We change that to a 1 day, 1 minute, 1 day, 1 minute. Where did this come in? It came in at 849. So we come and look at what happened at 849. What's right there? 849. So notice what happened here. We had what? About 168,000 shares traded. The price went up from 1408 to nearly 420. That is a gamma squeeze, folks. The call activity is pushing the price. It's moving the volatility of the option as well. And so again, this is pushing. Is this a reasonable trade? Well, it depends on if you like this position or not. Could this stock keep going? Let's look back here. 5 years daily. We just broke out above 13. This is a longer term breakout in ROIV. What kind of catalysts are there that could potentially move this more in the near term here? We're going to look at ROIV. This is Roivant Science Biotechnology, right? This is a clinical stage. This company has no profits, okay? This company has no product. They're just developing stuff, and it's got a 9 billion market cap. But what does it do have? It has what? 7.6% of the shares are shorted and a short ratio of 8.74. So with 417 million float, that's pretty high short interest. And that's a very high short ratio. So what we can see is that the shorts can move it, but that's kind of what we're already seeing it because they have. We've seen 10 million shares trade over the last little bit. We're seeing a big move in ROIV already. Can you take a stab at it? Okay, healthcare. This is one of the leaders today. Might be the next move. Probably not going September. Could you get out here to October? Can you buy a spread? Is there sufficient depth to these markets? The 15 strike you do, and then it really tapers off. These spreads get wide out here, don't they? Now, again, as the price moves, we'll probably see this catch up. It should fill in. It's probably okay. But the high short interest creates a scenario where 65.8%, 67.9. This spreads, you buy it's 50 cents. Go out to 16. Buy a 16 strike and sell an 18. Could get stuck in it a little bit, right? Cost you about 20 cents to do it. And if this thing squeezes to 17, is that an 18? Sorry. 16, 18. If this thing squeezes to 18, that could be a huge trade. But that's pie in the sky stuff, right? The option volatility is probably already exploded, and these options are pretty expensive right now. Okay, so we've hit some dead ends, haven't we? We're trying to really just trying to break down what's happening in the market and find what opportunities there are. But notice what else is in here. We have UNH. Okay, UNH, it's had its problems, right? We know about it, probably do. Okay, Have they finally turned it around? What we're seeing right now in UNH is a decent breakout, right? We had a breakout a couple of days ago. Today, we're seeing the follow through in UNH. Now they have a dividend of 221 coming up tomorrow. So this stock, the price is going to be affected a little bit, right? Are these in the money options that we're seeing? No, because those are pre-screened. But we got a 355 being bought here. Okay, 2,000 contracts, 360, 250. Anything really sizable here that really pushes the envelope? No. Right? We're not seeing large block trades in UNH. We are seeing a breadth of activity. So when we're seeing a breadth like this, we can kind of keep it simple and say, look, are they buying calls today? Well, we can see that right here potentially. So 258,000, that's 2 times the average. 27% of the ask, 19% of the bid, 52% between the market. We're definitely seeing a bullish bias to what's happening here. Do we have any large prints? So we're going to come down to the time and sales and we're going to clear the filters out and we're going to see what kind of larger trades are we seeing today. You'll see the 26 SEP 380, 600 contracts bought. Is that one of the ones on our list? 380? Nope. Right? It's probably closing. We got 400s traded, right? Being sold. 19 SEP 400. 19 SEP 400. No. Right? Nothing on that list. So this is why we have this going. But we're going to have to dig here a little bit, or we'll have to break into some of these individual strike price expirations combinations and take a closer look. Which one's probably reasonable? Well, let's look at volume for the day. We've got RYV. The second and third most are right here at the 350 750s and the 360 250s, and we kind of trickle down from there. The one I want to look at here is the 350 750s. Okay, 912. So I'm going to come here. That's for tomorrow's expiration. 350 750s. Anything really dominating the list here? Anything really dominating the list? Nope, not yet. Certainly not showing up. We're not seeing much of anything here. Let's go time. Make sure we're not missing. We're missing some time and sales, right? This is the difficulty of the work doing this work on Thinkorswim. This is why I created the console, right? In part, but 360 strike here. We could zero on that one. We got 365. We got 370. We were focusing on what? The 350 750s. Now, let's take a look at some of these other ones. Okay, but one day left. Let's check next week. So now we just got to keep digging, right? If we really want to try to find something to see if there's anything here, we're going to have to dig. In this case, 360 for 19 SEP. Did that come up on our list? 360 for 19 SEP. No, we got a bunch of 12s. I'm going to take off the 12 expiration. We've got what? 919. We've got the 350 250s. We've got the 340 750s. And that's it. So what we're seeing today in UNH is we're not seeing any sizable like trades that are being made. Okay, in UNH right now today. We're not. Okay, so this is going to be one of those things where it's a bit opaque. We can try to expand the net. We can try to come over here and say, okay, we're going to drop the ratio. Let's go 1.2. Let's go for something maybe a little bit bigger. Below ask. We're expanding. We got to select all the expirations. Do we bring anything more? We got RXRX. 20,000 contracts there against 2,000. We're seeing this is probably seeing very active trade for tomorrow's expiration. Let's look at RXRX. This has been a Johnny stock in the past. Now, here's the deal. RXRX. What we're seeing is there is significant activity going on here, and frankly, at the 5 strike. What do you think? What do you think's going on here? Chat is quiet right now. What do you think is happening right here? The 5 and 550. RXRX. Well, let's go down. Let's look at the time option statistics. Okay. 50% at the ask. Are they buying calls today in RXRX? Yes. Are there any significant, like big prints? Someone bought 1,600 contracts of the $5 strike price for tomorrow, right? This is tomorrow, folks, at the 5 strike price. Now, notionally, 1,600 contracts times 15 cents times 100. But we'll see. There's more in here, right? There is buying, two-sided trade here in RXRX. What other qualities can we find in this? So we're coming here. I'm going to go to Yahoo. I'm going to type in RXRX. Some of you may already know this, right? Some of you may already know this, but what is going on? What qualities does this stock have? It's right here, right? That's right there. What do we see? What do we see? Yeah, do we have dividends on this one? I don't think so, but yeah, no divs. It's also not in the money. But what do we see here? This company has 416 million float. That's a moderately sized float. Okay, moderately sized float. I would look for about 10% short interest or more. Okay, we're 30%. 30% of these shares that are availably traded on any given day are shorted as of right now. All right, that sounds good, right? Why is that good? They're short because they've already sold. If it goes against them, it may force them to do what? Buy it back. Okay, buy back those shares. Short ratio, 6.82. What does that mean? We take the average, we take the shares short and divide it by the average volume. It would take 7 days to buy back 24 million shares in that stock. Okay, based on the average volume traded every day. Here we have a stock that's been under pressure. Volumes have been declining, which is emphasized and added to the potential effect of short interest. We're seeing that volumes coming in today. The price is up. We're seeing healthcare is being what? Is one of the best performing sectors. Our whole process here, we're saying, look, it's up today. We may see a bit of rotation to healthcare based on what we're seeing today. And we're seeing this going on right now in RXRX. Okay. Has anyone seen Jaws? I watched Jaws with my 12-year-old for the first time. I watched a year ago with my oldest. He never seen it before. You know, it's like they just don't want to watch old movies. And I've got many, many older movies. But he liked it. And I forget the guy's name, the captain of the ship. He's got his line in the water. And he's starting to reel this in, right? Or no, sorry, it was Rob Schneider. Rob Schneider. He's chumming the waters. He's chumming the waters, right? Wrong scene. Chumming the waters, and all of a sudden, what happens? We're gonna need a bigger boat. Okay, so here's the deal, though. Right now, the volume has compressed, which is emphasized and added to the potential squeeze in the stock. So when we go back here, we say pump it down. Who's buying 1,600 calls? In part, probably people that are short. Who's buying 20,550 calls? Probably people that are short. And all of a sudden, what happens? It becomes a feeding frenzy. We're chumming the waters for the apes, the meatloaf people in the basement of their mom's house to come out and want to trade it. So what this means, this stock could readily go to 7. What are some past squeezes we've seen in the stock back here, for example? Went from 7 to 12. We're going to need a bigger boat. Shorts are guaranteed buyers at some point. And the reality is the shorts hedging by buying large blocks of calls, the market maker has to sell them. And now all of a sudden, they're short delta. They've got to buy stock. And so when we look at what's going on intraday, we're seeing these big pops here, right? What creates this? It's called a gamma squeeze, right? It's called a gamma squeeze. So all of a sudden, now you're the captain. You've got Jaws on the line, right? We've got Jaws on the line. Now, how do you bring him into the boat? Mommy made meatloaf. Now the question is, how do you bring Jaws into the boat? It's a risky bet, right? How do we kill Jaws? That's the question. You've got to be willing to risk the boat. The boat's too small, right? Jaws is big. Yeah, we've got to kill this fish. We've got to protect. It's Labor Day week. No, it's July 4th weekend. It was Labor Day. I can't remember now. Watched it twice last year. I can't remember the important details. So as we look at this, we're saying, look, how do you trade it? Right? We spot Jaws. We're chumming the water. Okay, how do I hook Jaws? How do I bring Jaws into the boat? Jaws may consume us because we've got to risk the entire premium, right? You buy the stock for 488, realize it could go from 488 to 2. Buying stock in this case is rough. But the fact is, we haven't had the feeding frenzy yet, right? Volatility is at 65%. Let's take a different angle. I'm going to go to studies. We're going to load the auto expected move. And with this, we're going to add something. I'm going to come up here. I'm going to go to edit studies and we're going to right click here. I'm going to edit properties and we're looking at a 3 standard deviation move. How many times in the last year has this stock made a 3 standard deviation move? This is what? This is the last year. Once. Almost twice, right? 3 times right there. We almost hit it a day late. Yeah, we did. We intraday hit it right there. 4 times. To the downside. Have we hit it there? Nope. 5 times. No, we haven't hit 5 times. 5 times right there. 6 times. When price 6 standard deviations there. 6 times. 7 times. I'm not even counting the ones to the downside. 8 times we touched the 3 times the expected move, right? 8 different times in the last year, we've made a move that was 3 times the expected move. 99.5% of occurrences should occur between that. And 8 out of 52 popped outside the outside of 3 times the expected move. What I can imply from this number right there, that 97% implied volatility is too low. Okay. 97% implied. Again, this is a decent range here. It's been more. But the fact is, even when the range is wide, we've hit it. Okay. This is a big fish, right? This thing moves. If you buy stock, you could take a big loss, right? How you can go get a big boat and pull it in, big line, reel it in. You might need a warship, meaning you're going to have to risk a lot to take this trade. But if you're trading options, you don't have to, right? So I'm going to be doing a special event here in about 2 weeks. So no, 2 weeks from yesterday. So I believe on the 24th, we're going to be talking about this and how to use the console, how to set it up, how to price options. I'm giving you some tidbits today. But RXRX is specifically the kind of company with massive short interest and a very high short ratio that we want to target. What could we do here? Just want to buy an out of the money call. They're buying the 5 and 550s here for tomorrow, but we're looking for a squeeze. We could buy next week. We could buy a 550 for next week. This thing goes to $6. It's worth 50 cents minimum. This thing goes to $7. It's worth what? $1.50. It's got to happen in 8 days. What about 30 days out? I'm going to stick with the monthlies here, but you could buy a $6 strike for 35 cents. We go to 7. It's worth what? It's worth 3 times that. Sorry, it's worth 2 times that, right? It's worth $1. So you get a 200% return on it, or you shoot for the moon, you risk 15 cents, and expect a squeeze in the next 8 days. And if we can get to 6 or 7, holy cow, right? You just killed Jaws. I don't know if this is a great analogy or not, but I'm going with it, right? You just killed Jaws. The bull got destroyed because you were willing to risk the 15 cents in 8 days to get a big move. This is your mission should you choose to accept it. Okay? What do we think? How would you trade this? All we want in this case is potential. Do you see the potential? What do you think? Comment in chat. Do you see the potential for movement here? And notice this has nothing to do with fundamentals. I doubt this company has anything going for it fundamentally. Let's just take a look. We're going to go to financials here. This stock brought in 64 million in revenue over the last year. Wait, what's its market cap? It's a $2 billion stock. $2 billion stock. Well, there's always the mother or father of Jaws. You kill Jaws, but there's another one, right? If you kill George Clooney, which who didn't want to kill George Clooney after that one? Then you say, okay, I'm going to bring in Christian Bale, right? There's these kinds of stocks, maybe not with this level of short ratio, but these kinds of opportunities are out there every day. It's just finding and deciding how many can you take on a week, right? That's the real question. But again, we're trying to take one swing a week and go sprints here. But to me, I mean, this is a setup, right? You're just getting a sense of the size of the fish you're dealing with. And how do you know it? You're seeing it right here, right? This is where you're seeing it under the surface. What could happen if we start to force the shorts to cover? That's where it gets interesting, right? So nothing fundamentally, there's no good stuff here. It's just a matter, all we need is a catalyst. The option activity is the catalyst, okay? 550 calls. Yeah, so Kara is asking a good question. Someone else at Casino David brought up skew. Now let's take a look at skew here. If you're going to go out more time, okay, we're focused on skew right now, right? We're looking at implied volatility. 98, 107, 108, 110. What do we see here? 145. Now the bid ask, there's nothing out. There's nothing out there, right? So really we're looking out here to about 7, 94, 107, 109. What do we see? Volatility is increasing, right? Volatility out here is decreasing until we get to 3. So why are we seeing the call volatility rising? It's because the shorts, right? Very high short interest. They buy calls to hedge their shorts. It gives them a right to buy the stock at 5, gives them a right to buy the stock at 6, and it gets cheaper as you get out here. Those hedges are cheaper. And so what you're seeing is there's more demand for calls as you move out of the money because the shorts are hedging themselves. And frequently they're selling puts to do it. Okay, so this creates a positive skew. Positive meaning there's an upside bias here, right? This is where the volatility is highest to a point. Okay, you can see it really scales up out here because the stock can go to 0, right? Now, make sure I'm not going over time here. So as we look at this, if you're doing a spread, there's a couple criteria. You could do a spread. You could buy a 5, but what are you selling? You could buy a 5 and sell a 6. You're getting 25 cents there. Reduce your cost from 60 cents to what? Maybe you can get in here a little bit if it lets you, but you're basically reserving for 60 cents to 35 cents. Is it worth it? It means a lot smaller move. You break even at 535. If you get to 6 by expiration, again, if you do that, you're only looking for maybe like a 70, 80% gain, right? You're not swinging for your fences. This is not a lottery trade, right? Could you sell the 7 and look for more return? There is, maybe 10, 15 cents to sell out here. You could go from 55 to 40 cents now, $2 wide spread. Now you're talking. But for this kind of pricing, you need at least 10 cents and you can get it. So you could more conservatively go out here 36 days, buy a 5 and sell a 7, try to get in for 40, 45 cents and swing for those fences, right? Shoot for $1.20, $1.50, right? So on this kind of spread here, you'd try to sell maybe $1.20, $1.50, right? Really look for big to kind of maximize it there, right? $1.40 rather, $1.20, $1.40 here. But if you get close to expiration under 2 weeks, just take it off if you have a profit. You could do that. Someone asked about, Kiara asked about, what about the 550 calls for 19 SEP? I like going next week versus this week. 550 calls for 15 cents, 13 cents. I think it makes perfect sense. But what are you doing? You're calling your shot, right? You're Babe Ruth. You're stepping to the plate. You're calling your shot to left to left field. And again, it's one of those things that this is gonna not work out more often than it's gonna work out. You're swinging for the fences, but that's the concept of a lottery trade, right? Could you buy a little or give it 2 weeks, right? Maybe a little bit bigger boat. That 550 is going for 22, 23 cents. The 5's going for 30, 35 cents. It gives you 15 days. What about 22 days out? There's a little bit of depth here, not a lot. Might cost you 40 cents to go 550. Sorry, 5 at 550, it's costing you 30 cents. Now, here's the deal. You've now got 22 days. If this makes us move to 7, that call option at 550 is worth $1.50 minimum. And frankly, if you get a move, you could potentially sell your 550 and buy a 6. Sell your 6, buy a 650, right? You can roll your strikes up here. Does eat your profits a little bit. But I got to pass the ball to Gianni here. Sorry, Gianni, but this is one that's really interesting to me at this point in time. I don't know what it's going to do, right? Nobody does. You can't do technical analysis on this kind of stock, period, right? You look at charts, it's way too volatile. Nobody knows how to price it. But we understand that we might be seeing right now catalysts that may create a gamma squeeze to a short squeeze. Call it a squeeze bar or squeeze quake. All right, well, Johnny, you ready to take over?
I'm ready.
But so we're just trying to figure out what's after today. I mean, look, I mean, I know you've kind of been long through this. We've taken off of some of our long trades, and now I'm wondering, okay, is today, do I have to suddenly get more long? And because I feel like today was a shift from where we were in the week.
Yeah, it's I see momentum picking up in certain areas. I don't know if it's going to be as broad, but tech is looking good. Tech is accelerating again, so the fact that we're seeing money flow back into that space bodes well for the overall market, I think.
Yeah. So your biggest cap names are.
Yeah, exactly. So I don't make the rules. I just try to see where the money's going. So
Absolutely. Well, I'll drop off. Have a great one, folks. We'll see you back tomorrow.
thanks, Brandon.
Different bat time, different bat channel though.
Take care.
See you. Yeah.
All right, Theo traders, welcome. We are live. Today is Thursday, September 11th.